I think that you're gonna be surprised to see how early we are in this inflationary cycle. The reason is because the Fed has kept telling people that they got inflation under control, and people have not bought silver in anticipation of the Fed failing. And now I think that they will start to, as you'll see CPI numbers continuing to be sticky.
Hey everybody, Smart Silver Stacker here. We are certainly living in interesting times, and things are really starting to heat up now in 2024. We got big moves for gold and silver. We got inflation. We've got soaring debt, AI about to take over, it seems. You got Bitcoin surging. So there's a lot to talk about. And today I am joined by Lior Gantz of Wealth Research Group to delve into some of these topics. So welcome back to the channel, Lior. It's great to have you on again.
Thank you.
So let's just start off with markets, the stock markets, because they seem to just be hitting record high after record high. You've got the AI stocks kind of leading the pack here, but I mean, all the indexes just keep marching up. I mean, today it looks like we're getting a little bit of a pullback, but what are your thoughts about these valuations for stocks? Is this justified by the fundamentals with AI? Are they just in a bubble? Where do you see this going from here? How sustainable do you think this is?
Yeah. In October of 2022, the bear market in stocks ended. And, the March scare of 2020, even though it was a bear market, it happened because of a pandemic, and it did not really coincide with fundamentals. So by August of 2020, stocks were back again at all-time highs. So I don't consider that a bear market. A secular bear market, but I do consider the 2022 bear market as a big secular bear market. And since we hit those lows, we are on a bull market. Obviously, all major indices in America are at all-time highs. And no, the retail public is not participating in a big way at all. In fact, inflows into money market accounts continue to be at record highs even as we speak. So it's certainly not the small-time investor driving up the price of stocks. And certainly, even if you look at AI companies, and I own a number of AI companies, or own shares of AI companies is what I'm saying. Even though their valuations are high, their growth prospects are so much more interesting than anything traditional era, Benjamin Graham type, Warren Buffett investors can look at. That, yeah, I do think most of them justify current valuation. I'll give you an example, okay? If you go to wealthresearchgroup.com/portfolio, you can download my portfolio, my entire portfolio. In there, you'll see that the company I love most in the whole world is a company that is focused on AI. Now, when I started purchasing shares, their P ratio was 75. Okay, so it would take 75 years to get back your money, right? But the next year, they doubled earnings. So the shares you bought are now at a 34 PE. And the following year, the revenues doubled again. So now it's 17 P. And the following year will probably double again. So now you're at 8 P. You're getting a bargain. In other words, companies that have incredible growth prospects and always beat their estimates, you can't judge them on current valuation. You have to judge them 10 years forward. That's the only way you can invest in these companies, because they have such a long run rate ahead of them. Right now, I'm investing in another AI company. When I say AI, I mean they create the cooling units for the GPUs. It's essential. It's almost like we call it like an ancillary company. So think about like Levi's in the gold rush. Like everybody needs the jeans, right? So it's not an AI pure play, but every data center uses these cooling units. And that stock is up 200% in the last 3-4 months, but it's still cheap. So I would tell you, I think that America right now is booming. It's booming, and it's also collecting a lot of debt. So what's happening around the world right now in the past 2 years is a massive deglobalization. China's moving one way, or I should say, countries that are traditionally detestful of Americanism are moving away and breaking away from globalization. They don't see anymore the benefits of allowing the United States to influence its culture more and to help it financially. They see more of the importance for them to keep their culture unit and to break away from globalization. Um, and China's doing this, Russia's doing this, Iran's doing this, North Korea's doing this, but a lot of other countries are doing it, Brazil, etc. And even in Europe, some of these countries are breaking away from globalization. And that means that America must reshore so much of the industrial base that it forfeited during globalization to other countries for the sake of creating this this global economy in countries that don't make sense, right? If you're like a Brazil, where oil is super high cost, but America invested in your oil refineries and oil fields because it wanted to integrate into the global economy. Now it doesn't make any sense. America is not investing in Brazil. It's reshoring oil. It's reshoring commodities. It's reshoring chips, which they gave away to Taiwan and didn't even flinch. So all of these are creating a boom in the United States, a real boom. You can't get enough workers for anything. And the rest of the world is seeing that America is so much more competitive than they remembered, because the last time that America tried to compete with other countries, this was before the Soviet Union fell. So in 30 years, you did not really have competition. And so all these countries built these very artificially high industries that only work if America subsidizes them and patrols the oceans and keeps them open. And now it's gone. It's gone. And Biden is slowly doing this. If Trump gets elected, he's going to double down on industry. He's going to double down on isolationism. And I think that you need to keep that in mind. So this is both a boom for the United States economy, but it's also very inflationary, which is why I believe that the retail investors are not participating, because I don't think they have a lot of discretionary income with housing prices and shelter prices and everything like that, also and food prices going so high.
Yes. Yeah. That kind of brings me into the next topic I wanted to cover, and that is inflation and what effect you see inflation having on the future of these asset valuations and stocks and on the Federal Reserve, because quite rightly, as you say, the housing costs are out of control. Food, I think the Wall Street Journal was reporting that food is now taking up the highest percentage of disposable income in 30 years. In the United States. So a lot of people don't even seem to have money to invest any longer. They're just struggling to get by, racking up huge amounts of credit card debt. So everything's getting more expensive, including these assets. What effect do you think that'll have on these markets and on the Federal Reserve's ability to cut rates, which also, I mean, to some extent, let me know what you think about this, but it seems like some of these increases in paper assets have been built on the anticipation of rate cuts. So how does all that play in?
Yeah, that great question. I think three things are important. One, the Fed is not operating in a vacuum. Other countries have already started to cut. So the pressure is on the Fed to start implementing rate cuts. At the same time, inflation on the short-term basis, the next 2 years, the expectations have been surging. And so Wheeler, who's a very important Fed governor, came up with a thesis that he wants Operation Twist to come back. Operation Twist is basically the Fed buying short-term bonds to suppress interest rates or yields, basically on the short term. But basically, if he proposes that, he's saying inflation is getting away from us again, and that's why you're seeing the stock market today absolutely tanking, because if inflation is again coming back, then that will mess up earnings. So that's regarding your question about the stock market, I think it's going to have to deal with this and see if this is real or not, and how higher is inflation going. So that's the uncertainty that's happening right now. That's why the stock market, as we're doing this interview, it's down like 2% on the Nasdaq. The reason is this uncertainty about resurging inflation. How much is actually coming back? Now, if it ends up that it's a moderate level that comes back, I think we'll be back to higher valuations because companies can weather this out and adapt. But you're also seeing gold surging to an impressive all-time high, and that is the reason why, because inflation is certainly back. I think that the Fed will hold off on cutting rates, but at the same time, it will drain its mortgage-backed securities positions because it should not be involved in the housing market, but certainly it will get into the business of suppressing yields again, which is sort of a version of QE, and that's why gold is surging. So I think that's important. With regards to housing, two things are critical. One, there is a huge shortage of housing in the United States. There is between 3 to 5 million homes that need to be built. That's a lot of homes, and they're obviously not getting built because of high interest rates and how much it costs to originate a mortgage, and that's deterring construction companies from doing this. At the same time, the border in California and Arizona and Texas is wide open, and immigrants from around the world are escaping Central American countries that are now basically so crime-ridden that they're not safe. Brazil, which is having like a communistic revolution over there, and people coming from Europe, from China, they're crossing the oceans. And the reason they want to come to America is because, first of all, they know that Democrats are very woke, liberal, and modern. And when I say modern, I don't mean it in a good way. I mean modern in the way that they lack any perspective on reality. They just they do what's good now without regard to consequences or the next generation or anything. And they're allowing these people in for two reasons. One is because there's a dire shortage of workers across America, not in high skill labor, but in low skill, low income labor. And two, because Biden wants to win an election. And if you ask any immigrant crossing the border, he'll tell you that Biden is a cuddly teddy bear. He's going to vote for him. So you got two things going on here. And I think that between that housing shortage that I just alluded to, and the influx of more people coming in, and some of these people will have families very soon. You're looking at a decade ahead that if you can get into real estate, you have a real chance of creating a fortune. There will be new areas that will be built, and as well as areas that have seen tremendous neglect during globalization that will come back. All along the Mississippi River, which is the best logistic corridor in the world, and it's been neglected for 100 years. You're going to see flourishing cities, flourishing ports, and new communities being erected. I think that America is going to have a major real estate boom, and millennials are getting married. They're forming families. They want to move out of the big cities into areas that they can raise their families and put their children to school. This is all coming right now, and I think that between that and interest rates that will be relaxed later on in this decade, you should already be thinking, even if you have a full-time job, how can you, as a part-time, join real estate? And if you're just fresh out of college, real estate is where you should go. Very low barrier of entry. You don't need a lot of you don't need to go to university. There's no, you don't need to spend $200,000 on tuition. You can learn the ropes, get into the business, and start anywhere you are. So I would definitely say there's a huge real estate opportunity. I don't remember what was the third part of your question. It was inflation, real estate, and the stock market. Am I missing anything?
No, that was pretty much it. Just yeah, we got housing, as you touched on, food soaring, and
Wait, I don't think I have an answer for the food situation. The United States has huge advantages in terms of food productions compared to other countries. I think that you don't have to really worry about food shortages or uh, food inflation in America to a degree that it becomes unbearable. I do think that in other regions of the world, certainly desert ones, Middle East, Africa, and countries that import a lot of their foods, they will have food shortages. It's crazy to say that, right, in 2024, but globalization has created an intricate web of supply chains around the world, and just some countries, if you look at the population and the professions that people have, only about 1 or 2% of the population are involved in agriculture. So I think that those countries, especially if they are countries where food is already 40% of your income, it's going to go up to 50 and 60% of your income. We are in for very, very, very different times than anything you've seen in the last 15 years.
yeah, we are very fortunate in the U.S. to have a lot of domestic food production. So I think you're right that while we may see
The
the
biggest,
cost of food rise, we don't need to worry about outright food and caloric shortages. However,
absolutely.
around the world, that may be an issue. We've seen some of that with the food protectionism, with India limiting rice exports. I think it was last year. Probably more of that to come. And also, I think the big point we need to look out for there is the contribution to social unrest that may result from rising food prices for the most vulnerable populations. Because when people start to genuinely, run out of food or suffer from food shortages, that can certainly create a lot of social chaos. So you're bullish on real estate, you're bullish on AI moving forward. You mentioned gold. Let's move on to the precious metals here,
Sure.
because that is a very interesting market at the moment. I'd like to get your take on that. We've got gold appearing to sustainably break out to a new all-time high, at least from where I'm at. I mean, we're above 2100 as we are recording this interview. It's still maybe a little too early to celebrate the breakout, but if you look at gold's long-term chart, there's a cup and handle formation. It looks like we're kind of breaking out of the handle now. What do you think the possibilities of a major run in the precious metals are being signaled by this breakout in gold? And also, do you think that the other metals are going to move as well? What are your takes on silver, platinum, palladium? Where do you think they're headed from here?
So a couple of things before I take that one. I remembered I wanted to tell you I created an exclusive report about the border situation. I cannot put it on YouTube because if I say what's really going on there, I think YouTube will ban the interview. So just go to wealthresearchgroup.com/border, and you can download that. But there are so many things that are happening on the border that you're not going to believe it. The parties involved and the blind eyes being turned away. It's insane.
I read recently that the violent crime rate in Venezuela has plummeted because so many criminals have fled the
Yeah,
country, and you
yeah.
know where they're headed. So yeah, I would encourage everybody to check out Lior's reports.
If you care about America, check it out. I tell you, I have looked at about 20 hours of footage from people on the border and how it's going on, and before creating this exclusive report. And the second thing I want to tell you is I got access to a few charts and graphs that are accessible basically only to top hedge fund managers, and they show how the recession in Japan, in Germany, and the depression in China, how it might trickle into more problems for the United States in the next few months, almost like a mini recession. So if you really are interested in great charts and exclusive things that normally don't get published to the public, at wealthresearchgroup.com/recession, I think you should really check that out. And for the border, also try wealthresearchgroup.com/TX, as in Texas. I think that both border and TX, they both work. So crazy stuff. Now let's talk gold. and other precious metals. Gold has broke into all-time highs against 80 different fiat currencies. Okay, in the past year, the big dog was the US dollar. And it did so in the last few days, especially after Whaler's academic piece came out about Operation Twist, and that he's looking to basically create QE again. That has surged gold. Now, I did a couple of interviews last week, and I said, look, in the next few days, it's either going to break out big or break down massively. There's no two way about it, because for 2 months, it traded in a very non-volatile, very dormant, boring range of $40 between 2010 and 2050. And it was clear that the next move will be a huge breakout or breakdown, depending on data. It's a huge breakout. It's a confirmed breakout. And I think that what was missing until this morning was for the stock market to start to price in that inflation back and how it might impact earnings in the consumer. And now that it's happening, it's going to drive the price of gold a lot higher. As we're doing this interview, this is a Tuesday. Tomorrow and on Thursday, there's a 2-day testimony by Powell at the Senate Banking Committee. I think that that will move the price of gold substantially. And what I really think is the big takeaway is we have been on an 11-year consolidation from the 2011 all-time high. We tried to break out a number of times over the 2100 and failed, and now we've succeeded. I think that the next big move is towards the 2400, and from there it's going to 3000. It's going a lot higher. This is a bull market for gold. And then what's beautiful about it is that silver hasn't joined yet. So you see just how early we are. This is Wall Street buying this. This is big money. This is sovereign wealth. This is central banks. It's not your retail guy. Call your call your broker, your dealer, and ask him. Call your dealer. Are you seeing people coming in? Or are you seeing more people coming in selling their gold and buying Bitcoin? I think that you're gonna be surprised to see how early we are in this inflationary cycle. The reason is because the Fed has kept telling people that they got inflation under control, and people have not bought silver in anticipation of the Fed failing. And now I think that they will start to, as you'll see CPI numbers continuing to be sticky. I'm not a huge expert on palladium and platinum. They've never been my cup of tea, my turf, just because they have so many industrial uses and they're tied so heavily to China. So I don't do anything that relates to them. I focus on gold and silver and gold silver stocks and leveraged ETFs, etc.
I see. Yeah, that's probably the way to play it. I mean, gold and silver are the ones with the history as monetary metals. So I can understand your focus there. And to your point about retail investors not participating, one thing I've noticed, I buy most of my gold and silver at SD Bullion. I haven't had a chance to talk with them about what they're seeing at the moment, but I have noticed that their premiums on physical metal have come down significantly. If you look at it year over year, the premium on a US Silver Eagle was like 100% last March when the banks were collapsing. Today, you've still got a crisis brewing in the regional banking sector, it seems, and yet you can get a Silver Eagle for a couple bucks over spot. You can get junk silver for just a dollar or two over the spot price. So, I think you're right that retail investors haven't moved into the space yet. What do you think the trigger could be that will finally get retail investors to pay attention to gold and silver?
The stock market starting to correct down, one. So they need to see that they need to prepare, that this is like a prepper moment. That's one. And two, I think that they need to see Powell acknowledging that we've entered a high inflationary period. These together are going to start this process. But I remind you The retail people will come last. The price of silver will probably be above 30 before they start buying.
Yes, that typically seems to be how retail investors behave. They, buy high and sell low, unfortunately, while the smart
Yeah.
money is, collecting all the big profits. You mentioned Bitcoin, and I think we can just kind of finish with that. I don't know, what your take is on Bitcoin. Do you view it as digital gold? Do you view it as a tulip mania? Are you somewhere in between? I'd be curious to get your take on that, though, because we did just have Bitcoin take out record all-time highs as well. So you're seeing gold take out new all-time highs and Bitcoin simultaneously. How do you think that's going to play out? Is that sustainable or is it a bubble?
Um, so it's a love-hate relationship because Wealth Research Group, when I started publishing, it was early 2016, and I I I said Bitcoin in a deglobalized world that we're entering, because this was after Trump got elected, is going to be an important asset class for countries with capital controls, sanctions that you can move money out of. It's basically going to be a tool to keep your freedom if you're in a screwed up country. So and it's worked. Like I featured Bitcoin on Wealth Research Group when it was $450 a coin. So you've made over 100x your money if you've been a long time reader.
Big gains
Ethereum,
since that time, yeah.
yeah, Ethereum, I featured at $12 a token. $12. So for me, I saw the importance of it, but you know, I think that what's happening today is and I hate to annoy some of your probably your Bitcoin enthusiasts or whatever, but it's a derivative on uh, on on black ops and government that's going on, and weapon transactions and uh, uh, other transactions. I mean, do you use it on a daily basis? Do you have anything you do it with on a daily basis? No. The retail crowd that's buying Bitcoin is buying it for speculation. Whoever's transacting in huge amounts, you can imagine what they're doing, because they're certainly not buying at Walmart with it. That's where it is, and I have nothing wrong to say about it. It's a derivative on chaos. Um, it's much easier to pay for things that historically would have been bought with gold, under the table, with Bitcoin, unfortunately. So I know Wall Street is getting into it, and it's probably in 20 years going to have other use cases, and it's going to help the new wave of the internet. But for now, if you're buying it, you're basically going long chaos. So if you're long chaos, I don't see it as a bubble, because people that must use Bitcoin for what they're doing will keep on buying it. The price doesn't matter to them.
Interesting. Yeah, I view Bitcoin kind of as a lottery ticket myself. I don't think it's a substitute for gold and silver, but as you say, it's sort of chaotic, highly volatile, and I mean, who knows? Could go higher, could go lower. Everybody seems to know for sure, whatever their belief is, one way or the other, where it's going. But I kind of remain ambivalent on it.
It really doesn't have a way to judge an intrinsic value above the mining costs. So to me, you can say, look, the mining cost of Bitcoin is X, and therefore it should be just a little bit above X, because what's the how much of a premium you're going to pay above the price that it takes to mine it, right? And then you can argue, well, even mining it, even wasting electricity on it, and everything like that, that's even a negative. So what's the importance of it? What does it solve? Who does it help? Who needs it? Where do you need it? But then you ask yourself about all of these countries around the world that are either under SWIFT sanctions, that have people that are scared of putting their money anywhere in these countries. They can get confiscated, nationalized. Their stock markets are volatile. Their fiat currencies are volatile. Their homes. Who knows how much their homes are worth? Look at China right now. They have 2 homes for every 1 Chinese person. It's the greatest real estate bubble in history, and it's all based on debt. So if you're trying to move money out of China or just move out of China, you can't do it with a bank. You have to do it with Bitcoin. And so Bitcoin solves all of these problems for countries where you have to get around their strict capital controls. So if you're looking to, it's almost like a like if you're in the West and you buy Bitcoin, it's almost like a business. You own a business that solves problem for other countries.
That's an interesting take, but yeah, it makes sense. So weaponization of the US dollar, deglobalization has sort of created a use case for an asset that you can carry around potentially millions of dollars worth of wealth just in a passphrase.
Millions, billions, it doesn't matter, right? Like
Right.
gold, you actually have to carry it. This thing is purely digital. I can tell you because I'm in Tel Aviv, I can tell you the IDF confiscated many crypto wallets from Hamas. And when they want to raise money, they also do it with crypto.
Yeah, well, I suppose that it helps you circumvent restrictions and sanctions. So perhaps there will be an increased use case for it.
And more regulations and taxation and all of these things. So just keep that in mind as well.
All right, Lior. Well, I really appreciate you joining me. It's always a pleasure to hear your take on everything going on in the world. And I will remind viewers to check out Lior's work at wealthresearchgroup.com. He's got lots of free reports there, which, you might get tipped off to the next major trend as readers were back in 2016 with Bitcoin, right? So definitely worth checking out. Thanks, Lior. We'll have you on again soon. Have a great day.
Thank you, sir.